Aloha. Stock market today analysis for Tuesday, January 24th, 2024. In the description of this video, there is a link to this website, ihavesuccess.com. And even though we're going to be looking at a variety of things in the stock market, in my opinion, the easiest thing to do is to be selling cash secured put options on stocks you don't mind owning. In fact, the mission of I Have Success, that's myself right there, is to help you begin your trading journey by learning to sell cash secured put options in a way that allows me to grow and improve in the process. You know, okay, I'm a selfish person. I want something out of it for myself. In fact, if anyone is selling stuff, you know, giving information online, especially about the stock market, about money, if they're not being upfront about what they're trying to get out of it, me personally, I'm suspicious of those type of people myself. But if you know, if you feel like trusting sharky waters, by all means, you do you. And so in the description, there's a link there. You can download a variety of things that would help you learn how to sell cash secured put options on stocks you don't mind owning. And then in that same description, there's 3 different playlists. The one that would probably be the best if you were only going to watch one playlist, 5 videos in this one called Trading Options for Beginners, with beginners in all capitalized letters. The final thing, at 2 minutes of this video, which is coming up, at 2 minutes, there's going to be a link that pops up right here. You don't have to watch it right now. You can watch this video and come back and get it later, but it's going to be a link to, and actually that link is coming. Get ready for it. Boom! There it is. That link is to a video that basically gives you 5 reasons why you should be selling cash secured put options. Now, if you know why, figuring out how to is a lot easier, right? People that know why have an easier time figuring out the how-tos. When your why is strong, the how-to becomes easy. So go ahead and do that. It's at 2 minutes of this video. Get the downloads here. Watch that playlist, and then paper trade stuff. Paper trading is going to be one of your magical keys to success. Sometimes people poo-poo paper trade. Others say, "Oh, there's not real emotion in it," and it's really a silly argument because you know, people that want to learn how to box, they don't go into a professional fight their very first day because that's where the real emotion is. No, they punch a bag, but there's no real emotion in punching a bag. You know, after they punch a bag for a little while, maybe they hit the mitts. Their coach is moving around, but there was no real emotion in hitting the mitts. And then after a little while, they spar, but there's no real emotion in sparring. And then, you know, and then when you're ready, you go into the biker bar and you pick a fight, and you either, you know, knock them out or you get sent to the hospital because you want the real emotion. So don't do that, because your equivalent of, you know, going to the biker bar and picking a fight and getting knocked out is having your money taken. Now, when it comes to fighting, you know who you're fighting, right? You can look at that person and be like, man, that person's got a 5-inch reach on me. That person's gonna jab my teeth out of my mouth. Or, you know, or you're a bully and you're like, hey, I can beat up this little 5-year-old kid because I'm a 45-year-old grown adult. So either way, you know who you're fighting, right? But when it comes to the market, you don't know who you're trading against. You don't know if Warren Buffett's on the other side of your trade. You don't know if it's some you know, Wall Street dude. You have no idea. So because you don't know, make sure you know what you're doing at least a little bit before you start risking real money, right? Just like you're going to punch the bag a little bit before you try to really get in a fist fight. Anyways, let's look at these futures here, and we'll start with Bitcoin. Start with Bitcoin, just to go this way for once. Start with Bitcoin. We see it hitting that 200-day moving average. Seems to be losing. Look at that volume really falling off right in there. Had a lot of volume to get up to here, but is it going to need a lot of energy to get through it? Since this is a futures contract, that's probably why this volume is really low. Because I don't know when this candle started. So maybe we got to wait until that one's done. that's probably a premature call there. You know, look, it's hitting an all-time high in the last 30 days of trading. And yeah, it's been on this bit of a bull run. So let's see if it's going to break out above a 200-day moving average. And if it does, is it going to stay above the 200-day moving average? Silver going sideways above the 200-day moving average. Gold was moving up. Now it's going sideways a little bit. How long is it going to go? If it stays above this 1900, if it stays between 1900 and 1950, then I think we would have a case for it to go potentially rally higher. This one definitely, this one to some degree too. This is politically influenced. So you never want to discount the politicians and the bankers, the central bankers, and they're all lumped into one category for me. They're all government people, and I know I'm not gonna pass some I don't even know what you call it, like some high school class by answering it that way. But I'm not trying to pass high school classes. I'm trying to make money, right? You don't necessarily need the right answers. You need to make money. So for me, lumping all those dorks into one category, that works for me. But it's kind of going sideways. We'll see if it is going to break out of this 550. But if it stays in this range, then it's possible maybe it could go a bit to the upside. Natural gas. We see natural gas seems to be slowing down, right? Remember how many videos it was ago that I was talking about? You can watch natural gas. Don't necessarily trade it. It's known as the widowmaker. But it was up here at a high at 5 something, hit this low at 3. How much lower can it go? I mean, 0 is not too far away from 3, right? So I figured maybe it's going to start slowing down, and we're getting an idea of what it's giving us, a pattern potentially. We'll see if it kind of bottoms out here, goes back up, or is it going to continue moving down? And if it does continue moving down, I don't think the circumstances are set up in society right now. I could be wrong on this, but I would say there's a low probability this is going below 0. It could. In theory, it could go below 0, but I don't think in the next 3 months this is going below 0. And so you can watch it and get an idea of what does it look like when something starts possibly reaching a bottom. Crude oil still hovering around this 80 bucks, right? Volume. It's got a lot of volume going on. And 10-year treasury yield, another one that's just completely politically influenced. Got this bounce off that 200-day moving average, but seems to be pivoting right in here too. Seems like it's going down. Over here, futures for the VIX moving up slightly, but moved down over the last 30 trading days, hit this low here, came back up, pivoted around there. So we'll see how it's going to go. This is a derivative of the people of option contracts on the SPX. So look at the chart, and I don't know if that's the greatest thing. I think maybe looking at the SPX would be a little bit better. This is the futures for the SPX, or the S&P 500, and it is right now seems to be kind of topping here, right? So we broke over this 200-day moving average, and even though it's got this new 30-day high here. Technically, you could say, well, it's a higher high. Yeah, it is. It's still kind of in this range. Let's see how those things play out. We're looking to see, here's the 4 futures of the main stock market indices. We're looking to see is this bear market going to continue? Is it going to end? And if it is going to end, which trend is the market going to be taking? Sideways, up, right? And so far, your good buddy Brent I'm thinking a little more sideways to down, unless the government comes in and doing some sort of program that gives the results of quantitative easing, even if they don't call it quantitative easing. So the Dow Jones, okay, a little bit up, but kind of sideways, roughly, still above this 200-day moving average. NASDAQ, pardon me. I hit the sauna. I got out of the sauna about an hour ago, and I guess I'm ready to go to sleep. So Nasdaq not even making it up to, getting closer than the last time, right? Closer than the last time, getting to the 200-day moving average, and the Russell 2000 futures is above that 200-day moving average, but it seems like we got a little bit of a higher high right here on this one. So yeah, we'll see. I mean, I think we could have some movement, more movement to the upside. That doesn't necessarily mean that it absolutely does not mean I think we're in an upward trend as far as like long-term trend. So the dollar, another political instrument, is kind of moving sideways right now. Moving sideways. Maybe that's why gold is moving a little sideways. Not sure. Sometimes when the dollar goes down, gold goes up. When gold goes down, when dollar goes up, gold goes down. Doesn't always work like that, but it tends to kind of do that. And the reason why is I think a basic explanation is that the this is a currency. So if this is going up, then it would take less units of currency to buy this. This number right here, granted this is a futures contract, this is not actual an ounce of gold, but this number right here is actually not indicative of the value of an ounce of gold. This is a better reflection of how many currency units does it take to buy a futures contract. So let's just pretend it was an ounce of gold, which is not, but let's pretend, just to make it easy here. This number is a reflection of how many units of currency does it take to purchase this. Same thing with a share of this. This number doesn't necessarily reflect the value of what this would give you. This number reflects how many fiat currency units would it take to purchase this. Now, sometimes you can have the value of an asset actually changing. Like you could, for whatever reason. I mean, it's not the only part of this equation is not the fiat currency that you're purchasing the asset in, but it is a part of that, and it's worth continuing to point out on these videos because it is a misunderstood, underappreciated part of it. The majority of people will just see some sort of asset going up, and they just think it's like it's going up. They don't necessarily realize it could be that the dollar is going down. So once you start understanding those differentiations, you could possibly make better financial decisions for yourself. TLT, which is representing 20-year bonds, that has it pulled back a little bit, bounced up, but overall over the month of trading, it is up. We looked at gold, we looked at crude oil. Did we look at we didn't look at these. We didn't look at these right here. VIX. All right, so VIX sold off today. This is known as the fear meter. It's like it is a volatility index. Volatility, IX index, and kind of nicknamed the fear meter. When I first heard about this, they'd say when the VIX is high, you buy. When the VIX is low, you go. Because when the VIX is low, stock market tends to be going up. When the VIX is high, stock market tends to be going down. And most people would rather buy low and sell high. So what is the overall, our 4 indices doing today? We got the S&P 500 broke out to a new high yesterday, but pulled back a new high for this, 30 days of trading. And today we opened up 50% into here. Look at that. We opened up right here, pretty much parallel with here. And then prices went up here. All right, so is that kind of making a top? I mean, this doesn't have any volume on it, so it's can't look at that. But if we had another candle like this, that's pretty bullish, right? If we had a third candle like that, even if it was just the size, but it opened here and closed up here, but that's not what we're seeing. We're seeing, but what could be said in a positive thing for if you want to see the stock market go higher. It's still in the top 50% of this candle, the body of the candle, so that's good. You know, if it keeps in this top 50% of the trading range, that means prices are kind of pushing higher. They would probably keep, theoretically, maybe they might keep pushing higher. And it's, you know, the more days it stays further on top, further away from this 200-day moving average, the better, you know, better it gets. If we see things start testing down here, right, it's not necessarily a terrible sign, but it's, again, if we saw prices up here, that's different than testing down here. On the Dow Jones, we kind of got this engulfing candle, right? Today it opened up where today it opened in the same place that it opened yesterday. So it closed here, but prices opened down here today. Traded all the way down here, traded up there, but look at this, prices closed over here today. And one thing to take note of is that we're in the top, we're finally getting into the top 50% of this candle, right? But really, to show some, this is showing us how much bullish strength is going up in the Dow Jones based on how many days it takes to get back to this level. So right now we're at 1, 2, 3, 4 days, and we haven't retraced where prices really sold off here. You know, and then we could take it to another step. You know, how many days does it take to get prices to get back to here, something like that. But you know, we could just use this candle right here because it's a big selling off candle. Whereas over here we took 1, 2, 3 days. Prices were regained that, right, over it. Over here we're at 4 days. Prices are kind of battling to stay on the top part of that 50%. So, you know, do of that as you will. And then over here on the NASDAQ, similar over here to the S&P 500, except for the prices are a little bit higher up. Opened a little higher, didn't really move as much, and closed a little bit lower. Still in the top part of top 50% of the body of that candle. And it's probably, I'm guessing maybe some selling pressures coming in. Maybe it's hitting some resistance around this 200-day. The Russell 2000, right, came back, tested this 200-day, bounced up, kind of made it back on the third day to this retracing, this lost pricing here, but it sort of fell off today, right? That doji-ish looking type of spinning top type of candle, sort of a bit of an indecision, running out of steam. Look what happened last time here, sell off. So does that mean it's going to sell off tomorrow? No, but don't be shocked if you saw that sell off tomorrow. But sometimes you'll see it, boom, and it goes up. But sometimes they're just taking a breather, but it's giving you an indication, right, that it's not this. It's not this. We're not seeing that on any of these. We're seeing a little bit of slowing in momentum. So let's see what will happen. Maybe when we look at these different sectors of the stock market, we can get a further better idea. Technology, ooh, look at that. More sellers than buyers, even though it pushed it up, right? But that's probably at least worth noting. There's more sellers than buyers. Healthcare, continuing into where this used to be a couple months ago. This was really had a nice run to the upside, and now it's just kind of getting this nice run to the downside. And so finally we got something to whip out the drawing tool here, and you can see this. It's not the greatest channel, but it's definitely sort of channel-ish, right? And you can see how at some point prices come down here, they kind of bounce up here, they come back down here again. Look at that, bounce up here, but it's not in a bullish candle. They just touched up here. They come down here, come here, sold off. All right, we got bullish candles coming up here, selling off, right? So, you know, maybe you want a paper trade practicing when it gets to the top of this, sell down, but you're looking at 30 days of data, right? 30 days. Could things change? Absolutely, right? This is not necessarily like a real strong trend. But maybe if you saw this in like a, I don't know, saw 6 months of that going on, or whatever. At some time, you see it's in a bit of a pattern. It could keep doing that. It's getting closer to the 200-day moving average. Didn't pull down as far as here, but right now we see prices moving down, right? And XLF, the financials, volume, third green day, but volume, a little bit less volume. And we see same thing. Prices retraced all the way down in here. It's in the top part of this top 50%. This one is falling even below yesterday. Top 50%, but is it running out of steam? Not sure. We basically got to pivot here. We got to pivot here. Could be getting, is it going to get past this 36? Or is it going to retrace back down, test that, or not make it, maybe make it to 36? And industrials are looking kind of similar to, was it the Dow Jones, right? We got this big candle here, 1, 2, 3, 4 candles, and I don't know if you really want to count this one, 3, 4 days, however you want to do it. I don't know if there's an objective way to do it, but that's the thing. You got to get comfortable with making decisions on information. Oh, got the peak in the volume there though. You want to get comfortable making decisions without full information. You're never going to have the full information. It's kind of why you get paid, for making the right decision. This is not, you don't need to prove this in a court of law. This is not something you bring into the HR department and document stuff, right? The people that are doing that, they're probably a couple months behind the people making money. And same thing going on with basic materials. So looking sideways right in there. But look, if you have a high right here, you got a high here, right? You got a high here. Now prices here, prices here. Look, it's in between here. It's in between here. It's in between here. This one's tightening up, this range. Battling that 200-day, right? You can see it went above it. Went above that 200-day, but prices pulled back. And what's our volume like? Look at that. More selling. If it doesn't show us how much more selling, but it just tells us there was at least, one more seller than buyer. Maybe who knows exactly. There's actually I have a custom indicator that would show us, but I don't want to take the time to figure it out. But overall, good enough for what we're doing. We definitely see there's more sellers than buyers, and selling volume really picked up. And so over in energy seems to be battling this a little bit under 92, right? 91.50, 91.60, somewhere in there. It's having a bit of a tough time. Volume it's been kind of low for a while. Really picked up back in here. We had, I guess, some of this up movement through here. Selling, sold off, and some up movement through there. But volume's been a little bit low, and even though it's been moving up. But right now you see a little bit of a sideways range there, top, kind of bottom in there. Consumer discretionary, almost sideways from where prices were there, right? Retraced down here, pulled back right here, pivoted right here, kind of between there, maybe topping out. And consumer staples slowly making its way up to that 200-day moving average. Volume really picking up in here, and pivoted here. We'll have to see what's going on. Not utilities looking somewhat similar to consumer staples, right? Not exactly, but it's not, definitely doesn't look like this, right? These two look closer than than this one. And so real estate kind of got a similar picture for the last couple, 3 or 4 trading days. The only difference is like this was kind of going sideways, dropped down. This was kind of going sideways, popped up. But the last couple days looking somewhat the same, and it seems to be getting stuck under this $40 price range here. Whereas retail had a strong run up for I don't know how many days that is, 20 days or so, 15, somewhere in there, 25, and then pulled back. Got over this 200-day moving average, pulled back, came back over the 200-day moving average, and we'll see. Seems to be getting stuck under this 68. Let's check out the interest rates. Closing at 1 month closing at 4.69, 10-year closing at 3.52, 20-year closing at 3.80, 30-year closing at 3.69. Down here, this is the in purple is the SPX, in green is a 10-year treasury yield right up here. And we see that one thing that we see, there's a bit of a right, is that 10-year treasury oh, that's I think that's a future. Yep, that's a future of that. Well, anyways, I don't know if that how much that discrepancy is really going to cost us here, but I got that set up just to kind of get an idea. Like, the stock market's moving up, treasury rates kind of moving down, not strongly down. Not as stock market's moving up somewhat strong. So you can see over up until about here, the rates were moving up and the market was moving down. So what's going to happen? Rates kind of been moving down. Is the market going to keep moving up? And rates moving down, the value, we see another, I think yesterday, was that a, maybe we didn't look at it yesterday. I can't remember. But overall, we still got this inversion of the yield curve, which again is basically, like, you look at your 10-year, these longer term times of lending, right? They're all like 352 to 369, and over here, to lend the government for 1 month, they're going to pay you more than for 30 years. Now, if you're going to lend me money for 30 years, because your risk is more, right? Your risk is 30-year duration. Would you want me to give you more? Right? So why is it the government needs to give people more money for less risk? That's what they call. So normally it should go like this. Let's say our timeline is here, right? 1 month, whatever, maybe 3 years, and let's say 20 years, right? Just to get an idea, right? So generally, the way it's going to go is it goes kind of like this. Now, how steep it is and all this stuff, don't worry about that. But I just really want you to see that generally, if you loan the government money for 20 years, they're going to pay you a higher interest rate. They're going to give you more reward for lending them money for a longer time, because that's more of a risk. They're going to pay you the least amount of reward for the least amount of risk. And, you know, three years, they're going to pay you more than for 1 month, but less than for 20 years. Right? That should be somewhat self-explanatory. But that's not what we see going on right here. We see these short-term rates are significantly higher than these rates. So what we see, if this is the 20-year, this is the 3-year, and this is the 1 month, what we see is this. Basically something like that. We see people getting paid a lot more interest for a shorter duration loan, a lower risk loan. And apparently what this is an indication of is economic hardship, economic bad stuff. So why does that matter for what we're talking about? I think that it's worth looking at, because when we're looking at the what's the stock market going to do, right? Right now, we see that for the last year, it was going down. But about, I don't know, about right in here, right? What date was that? Let's see if we can figure that out. About right in there, somewhere in this time frame, right around the 6th month, about halfway through the year, it appears that what happened, with some hindsight, it appears that we started going more into a range, right? Because here we hit this low, and then even though it pulled back a little bit right here, we went all the way up here and tested this. And then we came back, went a little lower than this low, and then we came back all the way up here, which is not as high as this one, but just happened to be pivoted right there before, pivoted right here. And our pivot is a little bit lower right here. And it pivoted here. You see it pivoted here, kind of pivoting right in that area. We see it pivoted here before, pivoted a little bit below that, pivoted a little here, right in here. Had a couple different places where it pivoted. So it seems like right in here it started doing this kind of sideways thing. So because of these inversions of the yield curve, if we are looking at what's going on in the economy to give us a clue of what might happen in the stock market, then that would give us with this inversion of the yield curve, that would give us a clue that, like, don't think the downside risk is over. That's it. It's not at least, I don't know, I'm not thinking to myself that it's a guarantee that it's going down. I'm in my mind, I'm thinking the downside risk is not over. Right? There's still risk there. Does that mean it's going to happen? No. It's just like when you cross the road. Is there a risk? Yeah. Does that mean you're going to get hit by a car? No. But there's a risk, right? So, kind of put it into perspective. And so, so with this rally going on, we need to see it break above this. I think it could break above. That's about a 410 right there, somewhere there, 406, 410, somewhere there. It's at 402 right now, or 420 cents, but it's got to break above that. And then if it cannot break above 410, right, then it's not getting above 420. That just makes sense, right? There's just no way you can. The number 410 is between 400 and 420. So if it can't get above 410, which is, where's 410? If it can't get above 410, it's not getting above 420. And right now, right, in order, before it gets above 410, it's kind of got to get above 406, 406, 407. And we see right here, that it reversed there in the past. So let's see what happens. And just because it reversed there in the past, what do they say? Past performance is no guarantee of future results. So it doesn't mean it's going to happen, but it happened twice in a relatively short amount of time. So let's see if it does happen again. If it gets past it, then we got this 416. We got this whole area right in here of about like 416 to all the way up to like really 420, almost 430, right? But it's sort of this range of stuff. And until it's really past that, then just don't necessarily believe any hype that people are telling you the stock market's going up the rest of the year, right? We won't. If it's going to go up the rest of the year, it's really got to get past that stuff. If it doesn't get past that stuff and it pivots down, doesn't mean the stock market's crashing. If it pivots down, like how low is it going down? Like we see right here, and right here, and right here, and right here, we see it pivoted back up. So around this a little bit, somewhere between like 380, 370, somewhere in there. I don't know, somewhere around there, right? And so overall, kind of the range that I'm watching, these different ranges, it's kind of like in here, 380, 400, 420-ish. 360-ish. I say 360-ish because, hey, 357, that's close to 360. 362, that's close to 360. It's all kind of in this range. So that's what I see going on right now. And until it's really out of that range bound, then I'm not. Maybe can take a short term. Maybe I can take a short term directional trade, but you know what the reality is? Your good buddy Brent is a net option seller. I'm. If there was only one strategy I could do, I'd just selling options. I think it's just really, it's a lot more forgiving. And in case my buddy Richard is watching this, let me clarify. I'm selling out of the money options, not in the money options, out of the money options, because I want that buffer, right? I want that buffer. So even though I'm not selling options on the S&P, SPY at the moment, I have in the past. I might again in the future, but in the next couple days to possibly 2 or 3 weeks, I know for a fact I'm not selling any options on this particular instrument. So, but instead of thinking about the S&P 500, let's just think about selling options, right? And forget about this, right? Because this is not in everybody's price range. But we will look at these numbers, but forget that it's the SPY. We're going to pretend it's your favorite company. Your favorite company, right? YFC, your favorite company. If that's a real ticker, then this is an imaginary company. This is only for theoretical purposes. So if we're looking here and I want to buy, I want to buy this company. And this is what I'm dealing with right now. And let's say these numbers fit into my portfolio size where I can sell one contract on this. And if I were to buy 100 shares at any of these strike prices that I'm looking at, that we're going to theoretically talk about, then it's like, let's say it's taking up no more than 5% of my value of my account. So so don't worry about these numbers so much, right? We just want to kind of look here. So if I wanted to sell a cash secured put option, price action is right here right now. Price action is right here. One place that I could sell, like kind of the could I get paid for anything in here? I don't know. But this would seem like at the moment the safest place where you got the most buffer. Like it's got to get past this pivot point. It's got to get past this like 380-ish area, and then it's got to get past this 360-ish area. So, you know, maybe, I don't know, 355, 340, I don't know, something like that. Maybe even, if you want to be even safer, can you get anything below 340 or below, right? Because the further away from where the price action is, the farther the stock's got to go. Now, what's the trade-off for that? Or what's the trade-offs on each side, the good and the bad trade-offs? Well, a good trade-off is it makes it less likely you're going to get assigned. And the good trade-off is if you do get assigned, you're buying 100 shares at a way better price, right? Wouldn't you rather buy 100 shares of an asset at a lower price at like $340 per share versus $360 per share? I mean, wouldn't you? I know I don't know you, and I'm pretty positive you would rather get a better deal. And I don't need to know you. All I need to know is understand humans want good deals. So that's one thing. But my trade-off is I'm not going to get as much premium. And what if I want to own the stock? What if I'm totally okay with owning it at 360? Well, I could sell here at 360. I'm going to get more premium. It still needs to get below this resistance or support area, and it needs to come down here, right? See, it got close here one time, pivoted up. Right, or I could go even a little closer right here at the 380. My risk of getting assigned is increasing as I go closer here. My buffer decreases as I go closer. My premium increases as I go closer. So do with that what you will, but you know, whatever you do, paper trade. That's the granddaddy of them all. And man, 8:34. I'm gonna try to get to bed by 9:30. You guys have a fantastic night. Aloha.